probably been hearing a lot about this crazy speculative mania overtaking semi-worthless and declining businesses like Gamestop as chat room mobs buy the stock with mostly the sole purpose of destroying the hedge funds that are short these stocks. Shorting stocks means the hedge funds are borrowing the company, hoping it will slowly go out of business like Blockbuster or Radio Shack. And GameStop appears to be that kind of a business. But what happened is all these small investors armed with margin and pocket casinos produced by Robinhood are pumping the stock up to a level of ridiculous valuations. Now, everyone's talking about how this could work, and the hedge funds are losing billions and the Reddit mobs are gaining these billions. But in reality, this is going to end badly in almost all cases. I just want to explain exactly how this is going to go wrong for the individual investors. In the long run, it would always go wrong because the fundamentals of this company have not changed. Until the Redditors start buying more products from GameStop, that company is not becoming worth more money just because the stock is higher. So eventually the stock has to come down to reality because the company could go out of business and what the stock's not going to be $400 then. In the short run, it is also an equally dangerous game because investors are like, oh, it doesn't matter. I'm just owning this for a few weeks. It'll go up a high. When the short covering kicks in, I'll be out. Boom, I'm going to be so rich. Okay, here's how it goes wrong in the short run. First of all, the hedge funds, they might not cover their shorts, or if one covers their shorts who lost a few billion, a bigger hedge fund might come in and say, oh, this stock is now $40 billion. It was a good short at $4 billion. Now it's a great short. Those people have a lot more money than the Reddit traders, and they can have access to much more money to continue doing this short. They could take almost unlimited losses in many cases. The Reddit investors, probably not. Now, what else can go wrong? First of all, there could be a regulatory crackdown. It is market manipulation to group together and pump a stock up higher with the sole purpose of hurting the other side. Not because you think it's a great company, not because you think the earnings are going to grow, because there's someone who has a short position. Now, I'm not saying it's definitely going to happen because no one likes hedge funds and everyone loves the little person, the little guy investor. But the reality is the SEC has gone after small. You want to talk about small investors? In the 90s, they busted a teenager who was pumping worthless penny stocks in a chat room. He had to pay a fine. So there is a long history of going after small investors because the market manipulation behavior scares ordinary investors from investing, and the SEC is looking out to not have the stock market look like a casino run by margin gamblers. Another way it could go bad, the trading could stop. We've already seen Robinhood freeze trading the stock. There could be a lot of freezes. The exchange could freeze stocks if it's speculative. That lack of buying can lead to the stock dropping as people can sell, but they can't buy. That alone can break a lot of the buyers and tank the stock. There could also be silenced chat rooms. We've seen a lot lately of Twitter accounts being frozen, YouTube, not so much for this, but that could be the next wave. If these platforms decide that whatever is going on is illegal, they could get notified by the government, they could clamp down on it, and then it's hard to group investors to buy a stock, which would lead to less buying power, but the hedge funds are just a few hands, they can keep selling. There, again, could be an underlying collapse. The stock can still collapse just because everybody knows the stock's really still worth $5 or $6 or $10. The stock supply can go up. I think people are underestimating this. The company, the executives, they were sitting on a company that was worth a few dollars a share. Now it's all of a sudden was briefly $400, $300 a share. They can cash in their stock options and sell that stock because they know it's not going to last. They can issue more stock. All these things is more supply of stock into the market. It's as if it was more short sellers. Now, if the company can raise money with this high stock price, sort of like Tesla, and do grow and have a plan to grow with that, it could be a long-term win. But reality is they're just going to exit this stock, dump more shares on the market. Fundamental business hasn't changed. It's going to tank the stock even more. So I think the short term and the long term does not look good because the fundamentals of the business haven't changed. The short investors are not guaranteed or even likely as a group to be out of this stock. They might even increase, and it is very unlikely that there won't be more shares on the market on the shorts, on the selling side, even if the company just issues more shares. And in the long run and the short run, this is a very dangerous game and hard to exit profitably for individual investors. Thank you.